Hi, everyone. This is Jason Burek of Wall Street from Main Street, and welcome to our Wall Street from Main Street podcast. Today's special guest that Mo Dawood and I will be interviewing is Aaron Basile. He is a very good blogger. He is a very talented 21-year-old. He is very good with technical analysis, fundamental analysis, and he leans towards the Austrian school. Hi, Aaron.
How you doing, Jason?
Very good. Very good. I'm trying to catch a little bit of the Oscars now. I was waiting to see if Inside Job would win the Best Documentary of the Year award, but I don't think it's come on yet. How are you doing, Mo?
I'm doing good. How's everybody doing here? Aaron, thank you for coming on tonight.
Well, thanks for having me on, guys.
All right. Well, before we get into the charts, I want to talk about your opinion on the macroeconomic, not just in this country, but worldwide. The biggest talk lately in 2011 has been inflation. There has been global inflation worldwide, which had led to many unrest in the Middle East, like Egypt and Libya and other countries, and it's starting to spread out into other regions in the world, such as China and India. Let's talk about inflation. The World Bank said that in 2010, food prices went up 29%, which is quote unquote very dangerous levels. What is your thoughts on inflation and how and what's your outlook going forward?
Well, the Federal Reserve, can deny, you know, their involvement in emerging market inflation. I think one of the reasons that Ben Bernanke used was people in the emerging markets changing their diets led to inflation, uh, you know, in their respective countries, which, in my opinion, is absolutely ridiculous. You look at, wheat prices, over 100%, cotton, sugar, all going up, and that's Federal Reserve. That's, uh, the United States, Canada, Europe, and Japan exporting their inflation out to India and Brazil and Indonesia and these, smaller, poorer countries. And you're seeing, people, especially now in the Middle East, like with Egypt and Tunisia, just the civil unrest.
Yeah, I completely agree with you, Aaron, about that outlook there. I think the Federal Reserve is being nonsensical here. In terms of inflation here, when the dollar is the world's reserve currency, every other country has to react to what the U.S. is doing from a monetary policy standpoint. So that's a good insight.
Yeah. Ben Bernanke has announced that or hinted QE2 on August 27th in Jackson Hole, Wyoming, and ever since, every commodity just went up. Um, uh, well, silver and gold went up, as well as the other commodities such as wheat and corn and sugar. Um, what is your outlook on the commodities for the next few months going forward? Do you see commodities like wheat and sugar going sideways for a little bit before continuing on their uptrend, or do you think it's going to just continue to move up higher?
Well, if you look at some of the agricultural, ETFs like DBA, even Rogers' ETF, I can't remember the ticker symbol off the top of my head, but I mean, it's just been a straight trend for months, and it's just gone right up. And until you see like a major trend line break, or um, I just don't see food prices coming down anytime soon. Uh, just with the relentless monetary policy here in the U.S. And unless there's a major country that actually goes through a legitimate default, I don't see food prices coming down anytime soon. Yeah, they might stabilize, but commodities in general are going to continue to rise, especially as supply is tightened. Out of China, they're cutting off supply. There's talk of droughts in Russia and so on. Um, I just don't see anything big enough that's going to make a significant dent in oil or food.
Yeah, ever since the unrest in the Middle East started, oil has gone up. At one point, it hit $100. Right now, trading around, I believe, $97 or $98 per barrel. Um, Now, the one sector that doesn't hasn't gone up during inflation is housing, and the housing market has gone continues to plummet this year and last year. Usually, historically, when there's inflation, real estate goes up, but this time that hasn't happened. Why do you think that is?
Well, being a student of like the Austrian school, Ludwig von Mises, brilliantly pointed out how the value scale is more important than, the money supply. And during times of inflation, where inflation isn't driven by wages and, you know, people getting more hours at work in a booming economy, and where the inflation is instead driven by the central bank, people start to move away from, buying TVs and computers and stuff that they don't need, and they go into food and energy. And housing is a sector where, in America, it's kind of like how we view cars. We view it as toys. We view them as, fun. People can, put no money down on a house. And, I just don't think that home ownership should be, viewed that way. And you're seeing people go away from that stuff and they can't afford it anymore.
Yeah, interesting you say that because, like when I go to Costco, I still see TVs falling in prices. Like a flat screen TV, 42-inch, you can buy for $500. While I go to the food section and everything else is going up. So inflation doesn't mean that everything across the board will go up. Only the things that are necessary in life, and the two things that are necessary in life is food and energy, and those two will go up during inflation.
Well,
And there,
if I could just add to Mo's comments here for a second, Mo, that's a great insight there. I mean, one of the most freest markets there is technology, where there's innovation, where the quality of goods and services is going up and the price is going down, due to competition and all these other, Japanese, Chinese, all these other producers who are making quality goods, at lower prices due to, scale and other innovative things. So that's, that's basically a free market. One of the few things where, you're getting, nicer digital cameras, nicer laptop computers, nicer iPods, stuff like that. So, and plus, like you said, Mo, it's discretionary too. So in this type of environment, the bare necessities, the stuff, that we have to all, eat, and energy and stuff is going to just go up in price because, we can't really substitute it completely out. We have to, but, like we can cut back on, how many new TVs we want to buy. One more note here, guys, just watching the Oscars for a second. Inside Job just won Best Documentary of the Year. So maybe there is some hope now that the word will get out about this documentary and more people will watch it.
that's a lot of truth for the Oscars, I'd have to say.
I'm sure people on Wall Street not happy about them winning.
Oh yeah, that movie might be in more theaters now, where there's going to be a lot of people buying it and renting it on DVD. So I think it's good. Maybe more people will learn the truth. Although the documentary is kind of from a progressive slant, and it doesn't talk about all the problems with the Fed, the monetary policy and the interest rates, the Ludwig von Mises stuff. And how, the interest rates are not supposed to be manipulated. But, it's a good start, though. There's a lot of stuff in there, especially about the academics professors who were bought off by Wall Street. And some of the people at the Fed, too, who are paid by Wall Street, to do and say whatever.
Yeah, I agree. The Federal Reserve is there to look out for the banks only, not for the people. Anyway, just going back to the housing market in relation to inflation. Another reason why the housing market hasn't gone up is obviously the high unemployment in this country. Nobody has money, and the houses are still way overpriced. They're still way too expensive for anybody to buy. So if you factor that in, that explains why the housing market is continuing to go down in an inflationary environment. Well, now that we discussed the macroeconomic views, let's narrow our focus to certain commodities that you, Aaron, talk about a lot in your blog. Let's start with silver. What is your thoughts on the price action on silver lately?
Well, it's been nothing less than bullish. We dipped below the 50-day moving average during January. We got the RSI and the MACD down to more manageable levels. So from a technical standpoint, we really had a nice correction. We went almost straight up for about 4 months. So it's nice to see that they're not overbought yet, and that people still have to take profits, and that really just means that the trade isn't as crowded from a long-term perspective. I also think that I think that we've got a bottom at least $30. So I think that we will pull back here, at least in the next couple of weeks. But I think we have a strong support at $30, and I think that the 20-day moving average has been a very reliable support trend in the past, and that will continue.
Now, Aaron, what would change your opinion on that? To what type of indicators would you be looking for to confirm like a further breakout here in silver? Where silver gets past like a $33.50 resistance level and goes higher, maybe to the $36 to $40 range. What type of things should people be looking for?
One thing that I've always been able to use to my advantage is just the volume on the ETF SLV. And that, in my opinion, especially last week, substantiated the breakout above $30. You had months of volume that was under 20 million and under 30 million, and then you had 3 or 4 consecutive days of the breakout of that $30 resistance level of volume that was above 30 million, close to 50 million in 1 or 2 of the days. And that's just a great confirmation. Another thing you can look for is just that 20-day moving average. Every time, it's getting close to that, get ready to buy. I think that another reliable pattern is just any bullish engulfing pattern on the weekly or daily candlestick is just a great buying indicator as well.
Okay, and one more question from me, and then Mo can ask you some questions, Aaron, about gold and silver. What about the miners there? Did the miners tend to lead the way, Aaron, or have the miners, been like, are they laggards and, they catch up and go ahead, kind of like the slingshot effect there? What do you see in the charts and from the indicators based on like the gold and silver miners?
Well, I definitely think that they've been laggards, especially for the last year or two. If you look back to 2000 to about 2008 up until the crash, the HUI performed very well in terms of gold. And then since then, it's still, even though gold's almost, at 1,400 now, and I think the low in 2008 or 2009 was around 850, the miners have still lagged. So, it's not surprising to me that they would continue to lag. And in the case of silver, when you're in backwardation, the demand is for the physical metal immediately, whereas a mining company has their operations and their mines for months and years, which looks less attractive during backwardation because it's not as deliverable immediately.
Now, going back to the silver chart, what's your outlook for this 2011 year? What's your price target by the time the year ends?
Well, everybody seems to like $50. It's a pretty round number, and I think it's also very realistic. But at the same time, we are in pretty much uncharted territory. So I think that anything above 45 would be pretty bullish, but I think 45 is pretty conservative, given the fact that the Fed's already talking about QE3, and just given the fact that a lot of people still don't understand the supply fundamentals of silver. just the supply shortage and how rapidly it's consumed, and how China is so keen to cut exports every chance they get.
Yeah, silver responded great when Bernanke announced QE2 in 2010, but when Bernanke announced QE2, gold went up, but then it lagged for the better part of December 2010, while silver continued to go up. Uh, when do you think gold will catch up, and what's your price target for gold as well by the end of 2011?
I think that gold will catch up as soon as you start hearing more about the pigs in Europe and less about, well, not necessarily less about, the Middle East, but I think that we're definitely getting close to a default in Portugal. The euro already has already starting to set up a bailout package for Portugal, and they will have that in April, despite denying it for several months. And I think around the same time, you're going to see the U.S. stock market peak, and that's when gold does well, just when other countries have to default by inflation. If you look right, just exactly a year ago with Greece, gold performed very well under those circumstances. Bailout package is just a great fundamental for gold.
And real quickly, what's your price target by the end of 2011 for gold? Do you think it'll hit 2000 like other experts are predicting, or do you think it'll hit below 1800?
For gold, I'm certainly a little bit more conservative with my price targets, mainly because gold is very steady on the chart, as evidenced by, the last 6 months, whereas all commodities were just, breaking out, and gold has been very, very steady, but, it just continues to chug higher. So I would say I would think about 1800 would be a pretty conservative price target, but I don't think that it'll if it does touch 2000, I don't think it'll remain above that for long, at least for this year.
Yeah, I predicted that gold will hit at least 1800 by the end of this year, but who knows? Things could change for the remaining year, and it could just in result, gold could just skyrocket and go up $50 or $100 a day. So yeah, you never know. I mean, it could hit 2000. Yeah, but definitely by next year we should be talking about 2000 price target for gold.
Certainly, especially when you look at the problems in Libya pushed gasoline prices up at about 15 cents, at least around here, just overnight. So the same thing could happen in gold.
I agree. I agree. I think the surge in the gold price lately has been in result to what's going on in the Middle East. Anytime there's uncertainty going on in this world, gold always goes up. I don't think this civil unrest in the Middle East is going to end anytime soon. I believe it's going to spread to Europe and Asia as well. Because inflation is not only happening in Middle East, it's happening in China, in India, in the U.S. It's starting to hit us. Not as hard as China, but eventually it'll get there. Now, you talked about gasoline a little while ago. What's your thoughts on the price of oil going forward? It just touched $100 last week. Do you believe it will surpass $100 and continue to rise? People said that if there's a protest in Saudi Arabia, oil could easily go up past 150. What's your thoughts?
Well, it's certainly a possibility. I think if you look at copper, for example, a lot of people were calling a top a few months ago at $4. But I think that they forgot to factor in inflation that's taken place in the last 2 years. The monetary base literally doubled. So I don't think that we can use the old tops that we've been using in this market. But I do think that if we do reach 6% of GDP, uh, our economy can contract, which can mean, a lot of bad things, especially, uh, you know, relating to inflation.
Aaron, if I could step in here for a second, do you have like an oil price where you think like it would start to, choke off any kind of this quote unquote recovery that we have going on now? Like 120 a barrel. Like last time oil got to like really dangerous levels, once it got through 120 and got up to 148, it just started to really, destroy the economy. Do you see a cheaper oil price it doing here as things actually worsen on Main Street, or do you see around those levels like the 110 to 120 level where oil starts to do tremendous amounts of damage to the U.S. economy?
Well, I think that it will do a lot of damage, but I don't think that it's necessarily going to come down because of that. I mean, most of the reason it came down in 2008 was just because of the financial crisis. I don't think that we're going to have a financial crisis, so I think it will continue higher. And I think that our economy is going to suffer, and that's going to cause, could be probable cause for QE3. So,
Well, they'll say on the face that that's the cause for QE3, but I think we all know why the real cause for QE3 is because like no one else is going to be buying the treasury bonds unless the U.S. government has talked the Chinese into coming back and buying more. But otherwise, the Fed's going to be the only person left to buy the 30-year treasuries because there's it's just too much supply and not enough demand.
and yeah, and they are officially the largest holder now, as of a few weeks ago, I believe.
And by the end of June, I stated this before, by the end of June, they will have more holding than China and Japan combined. That's how bad it's getting for the 30-year bonds. Now, let's move on and talk about the dollar and the euro real quickly. People, well, I saw people on the internet saying that now the dollar, if it goes past the support at around 76, it's in no man's land. It's pretty much in free fall. I disagree. I believe once it hits $72 and break that support, then I believe it's in no man's land. I mean, it could fall down to 60 or $50. Who knows? So, what's your thought on the dollar?
Yeah, I definitely agree that 72 would be much more like no man's land, especially for the dollar index. But I think a correlation that a lot of people have gotten wrong over the last couple of years is that the dollar index is a really terrible measure of inflation, and that I think that well, personally, I'm actually bullish on the dollar index simply because it's weighted over 50, I think it's 58% against the euro, and it's not weighted against commodities. And I think that you're going to see the euro get slammed a lot harder as they have to bail out Portugal here in the next couple of months. I think the exchange rate could fall as low as 120, maybe even further, and I really see the dollar doing well, at least for maybe the next year or so. But that doesn't mean that I don't think that there will be inflation in the U.S.
So, Aaron, you see more of a decoupling scenario. I read your article about 3 weeks ago, I think, where you were talking, about how like gold will rise. Your predictions were gold will rise this year, and then the dollar will also rise. So you see like a decoupling scenario where some people retreat, to gold as a safe haven, gold and silver, and other, larger money, the larger pools of liquidity that can't necessarily get into the gold and silver market, they'll go to the dollar instead.
Yeah, I agree. Just in relative terms, I mean, I know the dollar is a very weak currency, but there are a lot, there's a lot worse countries. Greece, Japan, they're going to keep defaulting by inflation, and I think the U.S. has a lot more time than those countries do.
Yeah, I agree. I believe the decoupling from gold and silver to the dollar will come. When? I'm not really sure, but when it does happen, we could see a shift, um, a shift of focus from the dollar to commodity. Um, the next topic I want to discuss with you is the equity market in general, such as the S&P and Nasdaq. It can continue to climb while the fundamentals of the economy get worse. Do you think it will continue to go up, or do you believe that the market has topped and it is due for a downturn?
Well, I'm pretty certain that it's overvalued, but as we've seen in the past, we can remain overvalued for a long time, even with terrible fundamentals. I think that this situation in the Middle East and the upcoming situation in the Eurozone will cause the markets to top temporarily. I don't know if the Nasdaq will take out the 2007 highs, but an interesting statistic that I've been looking at for a while is the top in the Nasdaq in 2007. This was the height of the housing bubble. That was 2861, and right now we're somewhere around 2800 with the Nasdaq. And right now, employment or unemployment is at 9%, and personal savings is above 5%. Whereas when the market peaked previously, unemployment was at 4.6%, and personal savings was at 1.8. And I think that that's, just the perfect indicator for, equities just being completely overvalued.
That's some interesting stat that you mentioned there. If Ben Bernanke announced QE3, do you believe the market will continue to melt up, or do you believe the market would act reactional and head south due to the fact that all the money printing in the past has not worked to improve the economy?
I think it's going to continue to rise. I don't know for how long, but I do think that when it does fall, like substantially, it will be a pretty big event. It's not going to be, just a correction or a steady. I think it's going to be more like a crash. I just don't see the fundamentals for this lasting, but as long as everybody thinks everything is on the up and up, they're going to keep buying and they're going to keep being bullish. I read an article, I think it was a couple of days ago, that Mark Faber wrote about the market has doubled 3 times in history, and the 12-month period after it doubled have all been negative. And the first 2 times it doubled was in 1932 and 1937 during the Great Depression.
That's very interesting that you pointed that out, Aaron. Everybody, everybody brag how much money they're making in the stock market in nominal terms, but when you account for inflation, they're really not making any money in the stock market. So there's nothing to be made in stock market unless you have it in commodities or any other hard assets. One of your favorite topics that you discuss on your blog is rare earth. I believe you're a favorite of Molycorp and Great Western. What's your opinion of those 2 companies going forward? Molycorp, ever since coming out with an IPO, has gone from, I believe, $13 to all the way up to $50, I believe now. Correct me if I'm wrong. And Great Western is starting to go up in prices too lately, before all the way up, I believe, to $1.10, and now going back down due to the technical indicators stating that the stock has been overbought and it's due for a correction. So what's your thoughts on those 2 stocks?
Well, Great Western, outside of it being a great company, I think the fundamentals are very misunderstood. and that goes for the whole rare earth sector. A lot of people still don't understand the magnitude of the export situation from China. But outside of the fundamentals, we did find support for Great Western at about 71 cents. Um, and we got a bullish engulfing candle on, I believe it was Wednesday. Yeah, Wednesday the 23rd. Um, and since then, we've bounced off of the bottom, and I think that we have put a bottom in it. We were down for it was about 13 out of, or 11 out of 13 trading days, so that was, clearly oversold. But going forward, I think that we have put a bottom in it, and I think this will make a run at $1 relatively soon. But this whole sector is very dependent on news out of China. So until we get some, more concrete news of, supply squeeze or, anything like that, any type of government grants going out to rare earth companies, I think that we'll, see some consolidation, in the near term.
Now, Aaron,
Um,
would you be a buyer of some of these shares at the consolidation points here, or as a trader, do you wait for the breakout? So, like, would it be smarter for a more long-term investor such as myself to want to buy here on these like consolidations, or during the dips here as things are like in a trading range? Could you talk about like some of the different mindsets here between like a trader and investor, and what like people should be looking for as clues to breakouts or whatever in the rare earth stocks?
well, you always want to be paying attention to the fundamentals, and if Wall Street's not following the fundamentals, then you're always going to get a good buying opportunity. But I think that you can buy breakouts, but as a long-term investor, but you want to know where the short, the medium, and the long-term supports are, and you want to have stop losses in place because this sector is extremely volatile. And if you're a trader, you can certainly find the bottom in these markets, but again, with the volatility, it's very difficult. So another way you can play that is leap options. I know the two of you guys have talked about leap options on Molycorp for some time. 2013 calls and stuff like that can be beneficial to reducing the volatility that you'll see going forward, especially since Wall Street just, in my opinion, does not understand the fundamentals of these companies.
Yeah, I completely agree with you, Aaron. Those are very good insights on the rare earths. Having written the Dragon Metals report with Kevin Kerr, having co-authored that, and just keeping up with the stuff. I mean, there's most people on Wall Street. Like I just saw a research report come out from J.P. Morgan talking about how China might be a net importer of rare earths by 2015. And it's something that a lot of people that are more closer to the industry have been talking about for many months before that. So this is something that that Wall Street's slow to catch up on right now. Although like I think Molycorp now, I think the institutions own like more than 92 or 93% of all Molycorp shares. So I think that's like the one blue chip in the sector. But I think like people can find a lot of value in the rare earths and the undiscovered stuff like Great Western Minerals and Ucore, which have really higher grades of the heavy rare earths. Whereas Molycorp doesn't.
Right, and that makes these companies buyout targets. Linus is another one. And when you look at these companies like Ucore and Great Western and Quest and Avalon and Stans Energy, you really have to almost wonder, why are they not performing even better? When Molycorp has just, been it's been such a benchmark for the sector, really. But I think a lot of people like Molycorp simply because of the mountain pass. It's proven it doesn't come with uncertainty as much as compared to these junior producers. But there's still a lot of hate going around for Molycorp.
Oh yeah, I'm staying off the Seeking Alpha message boards and comment sections for a while after a thing a couple months ago. Yeah, I'm not going to get involved in that anymore.
Yeah, rare earth is a great opportunity for any investor. It is the green metal of the future. Without these metals, we cannot have any of these green technology like the solar panels or the hybrid cars or the electric cars. So if you want to get into the alternative energy or the green technology sector, rare earths is a great way to do it. Now, before we uh, wrap up this podcast, why don't you tell our listeners how we can find more information about what you do and how to find your articles?
Well, I have a website which I post pretty frequently. It's aaronbasile.wordpress.com. I've also been posting some of my articles from my blog on goldeagle.com. And you can also check out my Seeking Alpha profile of my same name. So.
Okay, Aaron, and before we go here, want to ask your thoughts here and like one or two more questions. Do you have any predictions for 2011? Any general macro predictions? Like housing index or the S&P or the Nasdaq, or do you have any like good long or short ideas maybe for traders, like an options trade or a stock idea or something like that? Something you think like that you spent more research on that you're very comfortable in. A prediction that you're very comfortable in making.
Well, I'm certain that you're going to see the euro-US dollar reverse. I think that dollar is going to be bullish, and that's going to all go hand in hand with gold finally returning to like sector performance. And so what I see is the dollar reversing on the euro, and then the stock market possibly peaking around the same time. All of this caused by a Portugal bailout, the same way that Greece was bailed out last year, and then obviously I think other commodities like silver, they're really kind of independent from gold at this time. So I think that they'll continue to outperform, but I think gold is very still related to the stock market and the fear trade. So I think that, certainly my most biggest prediction there would be the euro-US dollar reversal.
Okay, well, thank you very much, Aaron, for your time today. Mo and I are very appreciative, and we look forward to having you back on our podcast here and having your articles on our Wall Street from Main Street website when we get that up, hopefully in the next few months.
I can't wait to see it.